DMBI.com, this is John's reports for the third. The rally continues. We have no change here. DOC still with steel under the cyan and well down near the negative 13 range. As long as it stays above that, you're in positive up mode. If it dips below, you get a slight correction. But even when you do get that slight correction, it's still going to be to the upside because even when it happened before, it was just a tiny move, and then it returned right back to the upside move. Same thing with magenta over yellow. You can get the crossover, but the further that range gets from 33, the more likely a significant move to the downside happens. But you've got to actually have that crossover. And of course, you'll see that long before the intraday. NQ, much cleaner. And you can see MBI white short range 0. So, it's interesting that we could be seeing almost green cyan meet here. So the rejection matters whether you get cyan crossing above or green rising and cyan fading. So that bifurcation really matters for us, and that's what we'll be watching for, because that tells you where your direction momentum is headed for at least the next rest of the week, especially since new fund money should be coming in at any moment now. We're here at the third, so by tomorrow, and it just grows from there. Oil ticking back up on the whole Iranian conflict, but this has already been so long that inflation is baked in for the ending part of the year, and that's exactly what the market is discounting right now, is devaluation. Nothing you can do about that. The euro is staying strong because they just don't believe the U.S. Success story, and inflation is still high in the eurozone now, so they have to raise rates from an ECB standpoint. So I think that makes the euro a little bit more attractive from savings, but not really. Economic-wise, the activity level relative to the U.S. isn't even close. Gold hasn't made its turnaround yet. That's just going to be a matter of when the numbers start coming through. People realize how significant the inflation bump is going to be at the later half of the year. Bitcoin suffering from the fact that the Iranians can't get that oil out of the Strait of Hormuz, so there's no point in buying insurance in crypto and not being able to move your stuff anyway. We can see our little pattern intraday here is where you get the beginning dip, and then it returns to the upside, dip, upside, and then we had pre-market dip, upside, and here's our pre-market dip, but each one is leading to just a little bit higher high each time. And that's just that rising fear. You can see that this was the dip early on in the Asian session, and it's of course related to when they see Iranians doing something. Is the peace going to break? But no, it's still pretty much there. What's interesting is if we look at the range of the day, that's it right there. If it's on almost on the one screen, and that is like a third of the size that we typically have. So volume drop off dramatic, and it's just because there's nothing of note until you start getting real numbers that indicate that the economy is struggling to handle the high energy costs or some kind of change in the world dynamic. The war with Ukraine and Russia, everything's kind of reached a stasis point. And so now everyone's looking for, well, what's new? We've priced everything else in. We need something different in order to justify change. So that's where we're kind of on that whole pattern for now. As always, anything relevant, I'll put it on a Team Chat. Have a good one. Trade well.